Accounts of non-trading organizations. Capital expenditure. Any expenditure incurred for acquiring fixed assets, that is for purchasing fixed assets, expenses connected with acquisition of fixed assets, and for increasing the earning capacity of fixed assets are called capital expenditure. Example of capital expenditure: building, furniture, investments, repairs on second-hand machinery, etc. The next one is revenue expenditure. The day-to-day expenses or the routine expenses incurred by the business firm for running the business are called revenue expenditure. Example: salaries, wages, electricity, and so on. The third one is deferred revenue expenditure. It is also a revenue expenditure, but the benefit of which extends beyond 1 year. That is, it goes back beyond 1 year. It can be said as revenue expenditure incurred for getting benefits over a number of years. Example: bulk advertisement expenses at the time of introducing a product or opening a showroom. And regarding receipts, there are two types of receipts: capital receipts and revenue receipts. Capital receipt: any amount received by an organization once in a while is called capital receipt. It is non-recurring in nature, and examples are sale of fixed assets, capital, loan borrowed, etc. The next one is revenue receipt. Revenue received regularly by an organization is called revenue receipt, and examples are sale of goods, interest received, commission received, and so on. The next one is balance sheet. Only capital expenditure and capital receipt are shown in the balance sheet. Capital expenditure is shown on the asset side of the balance sheet, and capital receipt is shown on the liability side of the balance sheet. To be short, only capital items must be shown in the balance sheet. Profit and loss account of a trading concern and income and expenditure account of a non-trading concern. Only revenue expenditure is shown on the debit side, and revenue receipts must be shown on the credit side of the account. In case of non-trading concern as well as in case of a trading concern while preparing profit and loss account. Accounts of non-trading organizations. The main objective of non-trading concern is to render service and not to earn profits. Examples: hospitals, educational institutions, associations, libraries, clubs, and charitable institutions. Non-trading concerns do not prepare profit and loss account as their main function is not making profit or trading. And the accounts prepared by non-trading concerns: receipts and payments account, income and expenditure account, and balance sheet. First, let us look at the receipts and payments account. Regarding the features of receipts and payments account, it is a real account. And the rule for real account is debit what comes in and credit what goes out. Only cash receipts and cash payments are recorded in this account. Receipts are shown in the debit side and payments are shown in the credit side. Receipts and payments related to the current year, previous year, and succeeding year are recorded. The next account prepared by a non-trading concern is income and expenditure account. And regarding the features of income and expenditure account, It is a nominal account. And the rule for nominal account is debit all expenses and losses, credit all incomes and gains. It is a nominal account. Only revenue expenditure and revenue receipts related to current accounting year should be recorded. To be short, only revenue items related to current accounting year must be recorded in income and expenditure account. Income and expenditure related to previous year or succeeding year should not be recorded in the income and expenditure account. So, adjustments related to outstanding, prepaid and income received in advance are made in income and expenditure account. Depreciation is shown on the debit side of the account. Expenditure is shown on the debit side and income is shown on the credit side of the account. The balancing figure of the account may be either surplus or deficit, which is transferred to the balance sheet. If the credit side is more than the debit side, that is, if the income side is more than the expenditure side, the balancing figure is known as surplus, and if the expenditure side is more than the income side, the balance is known as deficit. Treatment of special items of income and expenditure account. First item is entrance fees or admission fees. Entrance fee is the amount paid by the persons who want to become members of a club, association or any non-trading concern. It is a revenue receipt and it is credited to income and expenditure account. So this entrance fee or admission fee will be received by a non-trading concern regularly. So it is treated as a revenue receipt and it is credited to income and expenditure account. The next one is donation. Donation is the amount collected by the non-trading concern as gift from its members, supporters and well-wishers. Donation may be in the form of cash or in the form of kind. And donation may be also general donation or specific donation. Let us now look at general donation. Donation received for a general purpose is known as general donation. When the amount of general donation is very small, then take it as revenue receipt and it must be credited to income and expenditure account. When the amount of donation is very high, for example, say 1,000, 5,000, 10,000 and so on, then it must be capitalized and it is taken as a capital receipt and added to the capital fund in the balance sheet. So these are the provisions related to general donation. The next one is specific donation. Donation received for a specific purpose is called specific donation. And examples are donation received for constructing a building, pavilion, etc. And this specific donation is a capital receipt and it is shown on the liability side of the balance sheet. Usually, specific donation is collected once in a while by a non-trading organization. So, specific donation is considered as a capital receipt. The next item is legacy. Legacy is a sum or an amount received by a non-trading concern as per the will or wish of a deceased person. It is a capital receipt because it is also received by a non-trading concern once in a while, very rarely. So, legacy is shown on the liability side of the balance sheet. The next one is life membership fees. It is a fee received by a non-trading concern from its members only once in their lifetime. So, it is self-explanatory. This fee is received only once in the lifetime of the members. So life membership fee is a capital receipt and it is shown on the liability side of the balance sheet. The next important item is subscription. Subscription is the amount received from the members annually to keep their membership alive. So this income is received regularly by the non-trading concern from its members. So subscription is considered as a revenue receipt and it is credited to income and expenditure account. The next item is profit or loss on sale of an asset. Profit or loss on sale of an asset is calculated by comparing the sale value of the asset with the book value of the asset. Profit on sale of asset is credited to income and expenditure account, whereas loss on sale of an asset is debited to income and expenditure account. The next one is sale of obsolete items such as old newspapers, old sports materials, magazines and so on. So this sale of newspaper and old sports materials will happen regularly in a non-trading concern. So it is a revenue receipt and it is credited to income and expenditure account. The next item is honorarium. Honorarium is the amount paid to a person for giving a guest lecture or to an artist for giving his performance. And honorarium is a revenue expenditure. It is debited to income and expenditure account. It is a revenue expenditure because a non-trading concern, for example, an educational institution frequently conducts seminars or conferences and invite experts to give guest lectures. So, for the guest lecture given by the eminence, honorarium will be paid to them. So, honorarium is a revenue expenditure. It is debited to income and expenditure account. The next one is capital fund. Capital fund is nothing but capital of a non-trading concern. It is shown on the liability side of the balance sheet. Surplus is added to capital fund and deficit is deducted from capital fund. Next one is specific fund. Examples of specific funds are building fund, prize distribution fund, scholarship fund, sports fund and so on. And specific fund is shown on the liability side of the balance sheet. Any income related to specific fund is added to specific fund in the balance sheet and any expenditure related to specific fund is deducted from the specific fund in the balance sheet. Regarding specific fund investment, it is shown on the asset side of the balance sheet.